Hello, everyone, and welcome to this week's episode of Microcap Mania. Today I'm going to be going over the company Bark, which went public in 2020, of course, during the IPO craze phase, and at the time was unprofitable then, but I wanted to check in on it later as it's still trading at a microcap value, and it's a company I really like the idea of because, as you can likely see in some of the slides, it's a reoccurring subscription service that basically every month provides a variety of different treats and different items to your dog. And so a lot of the toys are themed. As you see, there's the Scooby-Doo theme. There's multiple, the Super Chewer is another one of their products. So really quick, I'll give a brief introduction to Bark the company. So, Bark is a dog centric company engaged in making products, services, and content for dogs. The company itself is located in New York City, New York, and it currently employs 708 full time employees. The company, as I mentioned, went IPO in 2020 during the IPO craze, and Bark has two key categories currently, but it's looking to expand in other categories. But currently, its two primary categories are, of course, toys and accessories, and its consumables. So, all of its products are developed, designed, and branded with the Bark logo and everything. So they make and sell their own products, which is quite rare in the pet space. You have a lot of third parties selling their products. Bark brands all of their products, they create all of their products. So its products are sold both direct to consumer, and recently they've been seeing growth in their actual commerce. So they'll partner with a Petco or a PetSmart, Walmart, Target, and they've been trying to push a focus on that. But primarily to this date, they are still direct to consumer. And then, as I mentioned earlier, with their subscriptions, which is the primary what sets them apart from the pack, no pun intended, the company offers the Bark Box and the Super Chewer, which again, each month they'll monthly themed boxes of Bark toys and treats, and they're delivered directly once a month to the customer's house. And then customers will have the options in terms of the subscriptions to either do 1 month increments, 6 months, or 12-month bases. And then it also offers multiple products now, including kibble. It's trying to focus on health, treats, toppers, even dental. It's really trying to expand its portfolio of offerings. And again, currently, though, the primary segment for them is their toy category, and that is where the majority of their revenues are derived. And then again, they're trying to expand also into beds, leashes, and apparel, and other miscellaneous products that will likely be implemented in the future. Now, going through some of Bark's things, this is one of the things I actually pulled from their investor relations PowerPoint. They're currently in over 7 million households, but again, dogs are the number one pet in America. This is a very, very exciting market to be a pet producer in. It's also a highly competitive market, which we'll get to later on in the presentation. But going back to some of the important stuff, what sets the company apart? The company focuses on collecting data for each of its customers. So basically, it'll have the parents or the owners of the pets go by, they'll set in pet name, pet age, breed, birthdays, play styles, and even pet allergies. And this allows for a more personalized advertising approach that kind of sets Bark away from the pack. So recently, they've been able to get into 40,000 retailers to sell some of their individual products, and even with competitors, they've recently gotten even onto Chewy's site, which Chewy again will be mentioning later down the line. But it's interesting to see Bark not only trying to push its subscription services, but also now trying to just push its products out there. So the company does have a heavy focus on share repurchases. Currently, since IPO, they've repurchased $11 million worth of shares, and actually in February, they announced they were going to repurchase an additional 4 million shares, and they're still finishing up one of their last rounds, so they have about 5 million worth in shares that are still going to be finished. So all in total, in the next little bit, they're going to be trying to repurchase $9 million in shares. Now, really quickly, to kind of break down one of their most recent earnings reports, we have some of the Q3 results. So, revenue for this quarter was $126.4 million, which was ahead of the company's guidance range, even on the higher end, which they expected to be 123 to 126. It's a 1.1 increase year over year, and that was primarily driven by a 43.5% year over year increase in their commerce segment, which is again in their retailer stores. So the direct to consumer revenue, which is their primary, it also had kind of a 4.3% decrease year over year, and this was primarily driven by fewer total orders in their most recent period. Now, again, I just mentioned earlier, they did in commerce, though, have a 43.5% year over year increase, and this, in a large part, was being added into more stores and also seeing more of their products in shelf space and SKU counts both rising with the existing partners. Now, in terms of their gross profits, what they actually were able to make out of these revenues, they made $79.3 million, which is a 2.6% increase year over year in their gross profit. They saw a little bit of margin expansion, actually, in their gross margins, which was 62.7% compared to 61.8% in the same period last year. They had lower expenses, both in advertising and marketing and in general and administrative. However, and this is where we kind of get into the problems with Bark as a business, they are still unprofitable 5 years later. They are closing the gap ever so slightly, but it's still an uphill battle for them. Their net loss this year was $11.5 million as compared to $10.1 million in the same period the previous year. And this was largely related to a $1.8 million gain from the they finished off paying some of this debt from the year ago in that period, and that was a large portion of that giant increase. Now, in terms of a per share basis of their losses, they're still again getting closer to positive. Right now, they're at a negative 0.18 EPS, but that's really come down quite a bit from some of the previous cycles. But again, when we get back to Bark in terms of an investment, I thought this was really important to cover, because just because a company has a fantastic idea that sets them apart doesn't necessarily mean they're a great competitor. So, on price to sales, they have a 0.5, price to book 2.17, but again, with them still being an unprofitable company, it's really hard to come to a proper price to earnings and compare to some of the more profitable businesses they're going to be going up against. Now, again, one of the primary pushes for them is going to be leading towards trying to grow those subscription numbers, and they have successfully done that. I did quite a lot of research into what customers thought in comparing BarkBox and all of their products to some of their competitors, and overall I was pleasantly surprised to see that customers really liked BarkBox's offerings. It was just at times some of them they felt like some of the themes were a bit hit or miss, which isn't the best to hear in a subscription service. But primarily, I read repeated reviews on how well the toys were created and everything like that. So this kind of gets us into, does BarkBox earn a spot in our portfolio? And personally, I'm leaning towards not yet. And really, this isn't anything to do with the business. I love the business ideals. I love what it stands for. And I really do think that this is a company that could potentially go profitable. It's just when we look at the pace at which they're paying off their debt, when we look at the repurchases, comparing that to how many shares they're actually issuing out to executives and to management teams as rewards and compensation, it's really not that much to get excited in. So again, I absolutely love the brand and what they're doing with their subscription-based services. I really think there's a lot of growth potential there, but currently the business value itself right now, they aren't getting close to profitability yet. It's probably going to take around 2 to 3 business years, and there might be a play once they actually get to profitability, but We're on year 5 and they still haven't crossed that threshold and they're still a bit of ways. I know the management team right now thinks that their shares are undervalued, and they could very well be, but for me personally, I want to invest solely based on the values and the fundamentals of each investment, and not because I really like a company or because I think they are apart from the pack. And then I kept mentioning it earlier, so I'll cover it now. One of the things I kept looking at was peer analysis, and this was because it's hard to do traditional valuation techniques on unprofitable businesses because they are so early on and it's really hard to come to great values. So I kept comparing it to Chewy, which is one of its primary competitors. And personally, Chewy was just a much better business all around. Now, they are significantly larger, so I didn't do a whole heck of a ton of research into Chewy in terms of an investment because I can't put it in the portfolio anyways, but they were just significantly more efficient across the boards than a company like Bark was, and that isn't a good sign to see from an investment term if I want to try and find things that could one day become a monopoly in their space. And a company like Chewy, you don't have to get a box with multiple things that, let's say, maybe your dog doesn't like or they don't play with, and then you're less likely to continue your subscription. With Chewy, you can seek out individual toys. If your dog doesn't like that, okay, you can move on and try something else. And they already kind of have the markets established that Bark is really trying to jump into. So, right now, I'm not particularly interested in investing in Bark for those reasons. I know one of the main reasons this popped across was, again, going through the COVID IPOs and also looking at a lot of analyst recommendations, and this kept on getting recommended over and over. So maybe I'm just missing something on this one entirely and I'll get shown up, and I'm all for that. But personally, right now, this doesn't cut the criteria I'm looking for to break into our Microcap Mania portfolio. But again, thank you for tuning into this episode, and I look forward to catching you in the next one. Thank you.